Hi, everyone. This is Rob Roy, and welcome to TradeFinder Live. If you're new to Elliott Wave Options and TradeFinder, welcome. Happy to have you. If this is your first time and haven't seen any of our videos, we do have to show you this disclosure flash disclaimer. Please take a screenshot of it, read it in detail at your leisure. A couple of things that the powers that be do want us to emphasize and make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers and a lot of international subscribers as well, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, again, please take a screenshot of it and read it when you have more time. It is important. All right, so let me give you a quick rundown of how TradeFinder works, especially for those that are new. If you've been here before, you know the drill. We'll go through a market update, talk about a couple different markets, and then we'll do a review of any trade alerts that we have closed for our alert subscribers, give you an idea of how that works, how our website works, etc. Then we'll review our case study considerations that we identified during TradeFinder. We've been doing this for quite a while now, and our track record is pretty good. We only have a few that are still open for consideration from the last several months. And then we'll look for one tonight, see if we can find a case study consideration that you may want to consider for this evening. And then with whatever time's left, we'll open it up to general Q&A. And that normally amounts to you guys giving us your favorite stock symbol. And we take a look at what our indicators have to say about it. That's it. That's how the process works. So let's go ahead and get started. Take a look at the market. And by the way, real quick, if you haven't looked at the SPY update, we just posted a new SPY update on our Elliott Wave Options channel. And we're really close to hitting 25,000 subscribers on our YouTube channel. We'd really like to get there. And so we're doing a promotion. Many of you may be aware of that right out of college, I became a golf pro. So that was my first career before my last 25 years of trading. So no, I'm not as good as I was back then. Time does have its effect. But for this promotion, if you are a subscriber, in the comments section on the video, just list who you think my current favorite PGA Tour player may be. And I'm going to list my top three. All you have to do is get one of the three, and then you're registered for the drawing. And if that video does bring us to 25,000 subscribers, we're going to give away 5 of our full alert subscriptions for 6 months. So please make sure to take a look at the video if you haven't already, and hit that subscribe button. All right, taking a look at the market, you can see that we finished with a doji today. And look at these 3 small days in a row, very low intraday volatility. Been talking about this rising, ascending, whatever you want to call it, pennant pattern that we're in. It's fairly tight. It hasn't been really wide in any part of it. So I don't know how traditional it would be. There was some comments about it being a diagonal, and you could probably label a diagonal in there as well, ending or beginning diagonal. That would be interesting to see. We do have education on our website. We have a full presentation on diagonals, and you can go through and when you see something like this, help to identify those types of things. We pride ourselves with the quality of the education that we post on our website, and that's available to alert subscribers as well. So it's not just the alerts. We do far more than just send out alerts. I know there's a lot of services that's all they do, is send out alerts. Some of them only send out entries, and you're left to fend for yourself from that point on. We do that for free here in TradeFinder. So I wanted to show you this. I did include this in the SPY update. This is a 1 standard deviation channel. So this is not a wide range, just the average movement of the market. And you can see that this entire wave 5 that consisted of 4 different zigzag patterns. We've identified them throughout the SPY update, so I don't need to go through those with you again. It's not the purpose of TradeFinder. So with all that, we've still stayed within 1 standard deviation. So what does that mean? This is just a good old-fashioned uptrend that's been occurring. Now you can see that, yeah, we have these little days. We do have this ascending pennant pattern, which likely means that some sort of a breakout is going to occur. But note there is room for an upside breakout. And isn't it interesting that the top of that channel also happens to be right at that 460 level, So if we break out of that ascending triangle and just move to the upper end of this 1 standard deviation channel, it brings us right to 460, which is the level we've talked about, which is on the Elliott Wave long count as a price target, as well as the weekly Elliott Wave chart. So it could make an awful lot of sense that if we do spring to the upside here, that we hit that level. We can break to the downside out of that, come all the way down to about 420 and still stay within this channel. I do feel like when the market does correct, 400 is a likely target. So we can have a bit of correction out of here without it being a significant type of correction, just one of these ordinary ones that have come down and bounced off the 50-day moving average throughout the course, as we've noted numerous times. So I wanted to share that with you for the rest of what's going on with the SPY. Again, take a look at that SPY update. Interest rates going up, the dollar going up, gold going down. It's a lot of stuff being covered in that update. So let's take a look at the Qs and see what is going on with them. Also covered them in the market update, and you can see that it's very similar to what's going on with the SPY, although we had a down day here where we had a doji in the SPY. Now we do have an ascending triangle here. It's not ascending pennant pattern, not ascending triangle. There is a difference, and it's not as large as the one on the SPY, but it's there just the same. The Qs are in a wave 3. We look at the DMI, you can see that is pretty similar to what's going on with the market. So look at that DMI, and then we go back and look at the market, bring that DMI up, and they're pretty similar, except for we do have the positive directional indicator ticking up, even with these little tiny bars. It's pretty interesting. So is there going to be a different sector of the market that's going to take the lead away from the Qs that have been, as you can see, a stalwart since the middle of May, just churning to the upside? Is that the end of their reign and a different sector is going to take over? Well, let's take a look at the IWM. So we'll look and see what's going on with the small caps. And with the small caps, you can see nothing has changed. Same exact pattern that we've been in for quite a while. We've talked about this. Drives me crazy when you see this kind of stuff, just dead sideways. Would have been a good butterfly, at the money butterfly, if you had a notion way back in March that we were going to go sideways for the next few months. That's the tricky part, knowing that you're going to go sideways for a while. We have a pretty good pattern here, though, of higher lows. And if we try to draw a triangle, we did this last week, where you see this triangle, and then you kind of slide these lines back here. It really looks like an arrow pointing to the right, with the consolidation for a number of months into this point. And you can see that we've got these 3 little days here, doji here on the small caps. Are they going to reemerge? They've certainly been consolidating for long enough that you could see the small caps come back into favor and make a break from here. We look at the DMI, not really giving us any kind of a signal there. CCI is a little bit more responsive, and it's climbing up. Note the higher lows that we've had in the CCI. That's really moves in a day-to-day basis, really responsive to the individual daily movements of the market. And it's climbed much higher while the IWM has just gone sideways. Positive divergence? It is positive divergence. We'll see if that leads to a breakout. Well, that would be interesting to see the small caps come back into favor. Certainly would be bullish for the market. Interest rates ticking higher, the dollar staying strong. Those are positives economically as well. Are we going to reach the peak at some point of this Delta variant to where we stop talking about that incessantly, day after day after day? I don't want to make light of it if you know someone that's ill or unfortunately has passed away from it. So again, not making light of it. We're just talking about how the market reacts to outside influences, and we could have a break to the upside once we get past the peak number of cases there, which some of the health experts, I'm not one of them, have been saying that we should be nearing that within the next week or two. And if we hit the other side of that bell curve, maybe that's some momentum to propel the market to the upside. I know we have a lot of international viewers, so let's look at the XJO, which last week, as you noted, was breaking out, moving nicely to the upside. Well, let's continue that. The Aussie market is powering forward, almost a little bit too vertical for me. Moving to the upside. Somebody's calling in on the Elliott Wave options 800 number. Why are they not watching this right now? That's why I should answer the phone and say, get on the internet. What are you doing? So right here, we'll let support get that phone call. But let's move to the upside here. We're moving a little more vertical than I would like. You know, I like that 45-degree angle. If we go back and look at that one standard deviation, you see why that's held? This is what I talk about time after time after time. I know I feel like I repeat myself, but we have new subscribers all the time. We have new viewers all the time. And those that have been here for a while, they hear it and like, yeah, I know he says it all the time. But for new people, they haven't heard it yet. I like it when the markets go in a 45-degree angle because the corrections when you're in a 45-degree angle tend to be less severe. Hence the fact that we've stayed in a one standard deviation channel all the way up. That really solidifies the point that I'm trying to make. Now, when we start to go a little bit vertical from that, you tend to get more severe corrections. Now, right now, it's just looking really strong. We just passed 100% extension on the wave 5, so I think that warrants maybe a little bit of caution at this point until we get a clear break from there. And when we hit one of these levels, like the 100% extension, we like to look at our confirming indicators, the DMI being the primary one, and that couldn't look any better. I mean, you could just take a snapshot of that and put it with any definition of the DMI and say, that's what you want your DMI to look like if you want the current trend to continue. In this case, it's an uptrend because the positive directional indicator is higher. So, I mean, you have the ADX breaking above 20, which I like. Great separation between the two directional indicators, fairly vertical on the movement. I mean, the DMI is supportive of the fact that we do break that 100% extension and head to 161.8. Now, remember, there's other fib levels in the way. 138.2 could act as a bit of resistance there. But, man, the Aussie market looks really strong. Did you guys do it the right way with the heavy lockdowns, et cetera? It seems like your market feels that you did, and that the significant stringent lockdowns that like Sydney and other places have been through has not had an adverse effect economically, at least not as far as the markets view it. They have no concern about it whatsoever. So we went through this really nice, tight sideways consolidation, a bit tighter than I showed you in the IWM, but similar in the fact that it is a sideways consolidation right through here. And you could even draw that line down there if you wanted to take all the bottoms in there. I like for the most touches of the line, you can see that it did trade right through 7,300 there a lot, but then the lows came down to 72. So I would draw the channel this way personally, and then the clean break confirmed by the DMI. Man, that market looks really, really strong. So if you're trading the Aussie, you know, I know you don't have nearly the optionable shares in Australia as we do in the US, but the market looks pretty good. And so then let's look at Bitcoin. I'm remembering this week. You've had to remind me the past couple of weeks to take a look at Bitcoin, but there you can see the breakout. Bitcoin was a little bit quiet today, but I think that makes a lot of sense. I actually noted that in the SPY update that Bitcoin had gotten just a tiny bit overbought, and it wouldn't be a bad thing if it were to just calm down a little bit. And we're approaching the next point of resistance. There's that 10-day moving average. So you can see there the separation from where Bitcoin is and the 10-day moving average. And Elliott Wave has been all over Bitcoin. So I would pay very close attention to what the Elliott Wave Fibonacci charts show with Bitcoin, because it's been so spot on. And you take a look at this resistance here around 48.5. Certainly seems like Bitcoin can at least go there. That's the rules. We broke above this with confirmation. Good support there. Moving to the upside, you look at the DMI, the ADX never really came very low with that descending triangle pattern, which is interesting to me. We talked about the descending triangle. So many people say that, oh, a descending triangle means we're going to have a downside breakout. And I've said that the data that I've studied doesn't support that whether you have an ascending symmetrical or descending triangle, it just means you're going to get a breakout. But none of them give you any sort of a nod with any sort of percentage of accuracy of which way you're going to go. Descending triangle, broke to the upside. So here we move higher. We'll probably bump our head there at 48.5, and then we'll take another look at the DMI and see if it shows that we still have enough strength to go higher. If we do, I don't think the 38.2% level on the way down is going to hold it. I think that means if we break through the 61.8, because that's a pretty strong level, we're going to retrace that entire extended C wave and go back up to 60,000. Then we regroup and see what happens from there. We do have to get through the 61.8% level first. I'm just saying if we do, we go up there. But right now, 48.5 is the near-term target, and that looks pretty high probability, at least the way the charts look at this point in time. You can see how the ADX is curled up with this, so it's indicating strength there. Positive directional indicator moving up. You want to see that positive directional indicator get above the ADX. That would be a bit stronger signal, but it still looks pretty good. And the negative directional indicator is moving to the downside. So we'll do some investigation of other sectors. We look at sector rotation a lot because that occurs in the markets. When one sector becomes really in favor, that's when things tend to go somewhere else. The big money moves on and finds sector that hasn't been performing as well. And could it be the IWM, the small caps? That certainly have not been performing along with either the Qs or the SPY. So that could make sense. We'll see what happens. But anyway, that's a bit of a rundown of the primary markets that we cover. And I think the next week is going to tell us an awful lot with this pennant pattern that we have in the markets. Are we seeing just, is the ADX trying to curl up? Maybe a little bit. It's certainly not straight down, maybe just leveling off a little bit. They're giving us any indication? I don't think so yet. I do like the fact that it's under 20. And so if we could get some separation here between these two directional indicators and they break similar to what the ASX is doing, and then the ADX starts to curl up, man, we could be off for that upside breakout, and 460 would certainly be in the cards at that point in time. So that's the market. Now I wanted to show you case study consideration. We actually just closed this one today. This is on cane. So basically it's sugar, get the symbol, C-A-N-E. We've talked about this one. We plan on staying in this position as an alert for our subscribers for a while. So why did we close it out? Well, let me go through it. Good question. Here was the setup when we looked at this. You could see that we had the wave 3, had some consolidation there, and down to test the 50-day moving average, we were moving back up. Remember, when you're looking to break, whether it's a Fibonacci level, recent high, major point of resistance, which we had both here, right? The wave 3 high and some resistance, you look at your confirming indicators. Well, the DMI was just setting up. The separation between the two directional indicators was good. ADX was curling up, just breaking above 20, really indicative of a potential break to the upside. And that's exactly what occurred. We did break to the upside, and don't really think this is done yet, but here's the problem. You can see that there's the vertical move, and it gapped up. So it gapped up and it went vertical. And one of the things that I'd like to share with this, and I'm going to do a trade review on this as well, but while I've got you, I think it's an interesting point. You go back and look, and this is another thing that we feature in our alerts. So basically, this is what our alerts look like on our website. Every one of our alert subscribers sees all of this information on every single alert that goes out, whether it's an entry, an adjustment, or an exit. We'll note that we bought the OCT5 or the OCT8 call. And if we go back and look, the stock was trading at 840. That's an in the money call, which is different than what we do most often, which is buy out of the money options, because the delta and the gamma are more in our favor if you look for a 25 to 30 delta. Again, we have lots of information on our website, educational information that explains all that, explains the math, et cetera, and why we do that. But recently, market makers have been kind of playing around with it. It seems like people are on to us. And there's far more. When I first started trading the out of the money options, discovering, hey, let's trade the Greeks, because they matter. There was very little open interest, very little volume down there. But now there's tons of it. So it's like the market makers have said, okay, we see what you guys are doing. And so they'll suck the volatility out when you get an upward move if it's not a volatile move. So when you see that potential there, and that's just analyzing the implied volatility at the time, the way to counteract that is to go in the money. We've done some in the money debit spreads on some of our alerts when normally we would be doing out of the money debit spreads as well. So it's the analysis of every single situation. Some we still go out of the money, but if you see the potential of, there's room for them to play some games, then we want to offset that. So exiting this, the issue was the gap up, the vertical move, and the calls in the money. It's well in the money now. So if we were to get some sort of a pullback to satisfy that overbought condition, fill the gap, whatever, then the profit would come down rather quickly because it's an in the money option. That's one of the other beauties of trading out of the money options is you get that acceleration on the way up. But if you're wrong or it takes time, moving down the curve is much shallower. So you don't lose as fast. So you have to be maybe just a bit more cautious if you're going to trade in the money as we did, but we still generated a 53% return, a little bit of a tick down there on our mark-to-market graph. And we show that every single position, every single day is updated for our alert subscribers. So if you're considering becoming one, that gives you a really good idea of all the benefits that you get by being an alert subscriber. I'd love to have you. All right, so let's go back and take a look at our recent case study considerations. And we only have a few left, as I mentioned. So we have Plantronics. Now, we did send this one out as an alert to our subscribers, and we've adjusted it a couple of times. If you've been listening to the TradeFinder, you're aware. So this was what we looked at initially when we set it up. And this was one of those instances where the market makers kind of stepped in here a little bit. So you can see that we had the downside breakout, but even with that downside breakout, it really wasn't that profitable. So we held on to see, okay, we're going to retrace this because that's what Elliott Wave triangles do. They retrace the breakout. And right in this area here, we considered, all right, take off the call options, let the puts go. But then it broke higher and it broke above the breakout point. And so you had to respect the potential for this being a complete upside breakout. So to offset that, what we did was we added puts. So we left the calls in case it was a move higher, but we added puts. So we had more puts than calls. And then we got the downside breakout. And so then we reversed back to having calls. So we made some adjustments just going along with this. And now we have another triangle. So something getting ready to happen here. We'll watch it. If it's an upside breakout, we're great. We may go ahead and hedge that with some puts again because we're sitting here at this area of support. So a break below this would send it all the way down, possibly down to 20. I've been looking at 25 for a while as well, but you trade what the market gives you. And so then on 6-1, we had ASAI, which we put the Elliott Wave pattern on. You can see it was in a wave 3. This was from our momentum search where we're looking for the lower dollar stocks. And then as we moved forward, we got to here, which was on the 27th of July. And you can see, we've got a pretty good symmetrical triangle forming here. So at this point in time, why don't we add some protection there? So we labeled that to move to a strangle. So if you're new with us, that would have been an adjustment. We do a lot of adjustments at Elliott Wave Options with what the market's giving us. Well, as you can see now, the breakout was to the upside, which is along the lines of what we originally looked at. We did add the puts, so that was a cautious move. So even though we've broken to the upside out of the triangle, still not to the profit target yet. So we'll keep that one open, but pretty interesting that it did break the direction that we were expecting it. But when you have a symmetrical triangle following a labeled wave 5 high, you have to respect the potential for a downside breakout. And you can see it actually gave us a head fake here. That occurs in the market all the time. So when you're trading triangles, strangles, as we do, be very careful not to jump the gun and take one leg off too soon. Looking at Johnson & Johnson, which was on the 27th as well. And you can see that we're bringing to the upside. We also sent this one out as an alert to our subscribers. and you can see right against all that resistance. So what do? We look at the DMI, and the DMI was favorable for a continued move higher. ADX curling up, it was only just above 25. Below the positive directional indicator, really would like to see more separation there, but it was ticking higher. And then with where we are now, you can see we broke above that resistance, and now we're consolidating right on top of that resistance level that's now support. Old resistance becomes new support, vice versa. Old support becomes new resistance. I'm sure you've heard that terminology before in the realm of trading. So that's exactly what's occurred. We had the clean break there. We didn't get a follow through, so it didn't continue higher. Follow through or confirmation day. So we've just been consolidating right here. Now, if we break from here, there's our wave 5 target. That's what we've been looking at for Johnson & Johnson. Now, if it were to break down below that, we would have to take a look at that as far as a potential adjustment. But for now, it's staying above that, so we have no need to do that. Well, then last week we looked at 3 different potentials. So we looked at FND, and I think this is a really good interesting thing here as far as the difference between TradeFinder and our alert service. So we looked at this, and there was the setup. Look at the 10-day moving average. It was a little bit overbought, but when you looked at the DMI, that looked pretty good. You could see the ADX was nearing 40. So it was a little hesitant there with that, if you remember, but we were breaking higher, and we did have a wave 5 target to the upside. There was still separation with a positive directional indicator. So we went ahead and wrote it down as a consideration. And since then, we had a down day on the 6th of August and consolidated right on top of the 10-day moving average. Now, that may be doing nothing but satisfying the overbought condition as it waits to make that move back to the upside. But it's a pretty good example of why I pay so much attention to when things go a little vertical or they get too far away from the 10-day moving average. So it just corrected that. And we still are above. If you're wondering, well, at what point in time would you consider saying, hey, maybe this one isn't going to do what we thought and take it off? Well, we have support there that we haven't come down to yet. But if we were to break that 115 level, yeah, I would say just release this one and let it go. Now, of the 3 that we looked at last week, the only one that went out as a full alert to our subscribers was Home Depot, this one here. And if we take a look at the DMI, you can see, boy, that was really setting up well. And you look at it, and we had an update today. We've pretty much gone sideways since last week, but moving higher. The DMI still looks good. So we're just consolidating right in through here. But certainly, by far, the best performance of the 3. As you'll see, we looked at Viva as well, and that one had been in the high value because it was a very expensive trade. Well, now we can see why the volatility was built in. So it moved to the downside since last week. So if we go back and can show you where it was last week on the 3rd, would have been here. So that was looking good at that point in time. The DMI looked awfully similar to FND, didn't it? It looked very, very similar between those 2. And it's interesting that they both perform the same way. In other words, both of them coming back down to support levels. So taking a look at this, you can see where we are, right back down to significant support there at 320. So at this point in time, if you're following along with this, stay in. Today didn't feel too good, but it hasn't broken support. It breaks to that level, whole different story. Don't really want to wait on it to come down and hit that potential wave 4. That's just a projection. That doesn't mean we're in the wave 4. It means if we are in a wave 4 and it labels the wave 4, the software labels it, which, by the way, this is a software called Profit Source. You can find out more information at profitsource.com. A lot of people like the charts. Show them they're very clean. They're easy to use. You can customize your own searches. I'm going to show you that feature when we start looking for case study considerations tonight. And it's, in my opinion, the best Elliott Wave software that exists. I've tried, I say this all the time, but it's the truth. I've tried all the Elliott Wave software programs that I know exist. There may be one that, or more than one that exists that I'm not aware of, but I've tried all the ones I'm aware of, and this is by far most accurate. And it's also programmed directly to the Elliott algorithm, the one that Elliott himself wrote, not somebody's own personal adaptation of it. So, if somebody makes an adaptation of it and they create a software out of it, well, that's great if it works for them, but do you know exactly what their viewpoints are? you have to learn their system rather than just learning Elliott Wave. So to me, that's learning two different things, right? You're learning Elliott Wave, then you're learning how they adapt Elliott Wave rather than just learning Elliott Wave itself. To me, it seems more difficult, but they're out there. And so here we are right at support at 320. And if it breaks that, then I wouldn't want to hang around. I would just close that one out if it were to head down towards that wave 4. Or you can see this gap that's laying down here. Certainly wouldn't want to hang around for that. But it's got to break 320 first. If it breaks that, then take the loss and go. But at this point in time, it's just testing support. And so it could hold and move back up to the potential wave 5 forecast here. So interesting, of the three that we looked at last week, based on further analysis, the only one that was sent out as an alert to our subscribers was Home Depot, and it's performed by far the best of the three. So just more information there on the value of the alert service. So let's go ahead and take a look at the scanners, and you can click here under scanners, and there's pre-computed searches that are labeled here. And that's because a lot of people with Elliott Wave options that were alert subscribers, because I use this program, I think, started using this. And so the people at the Hub organization, they're the creators of Profit Source, noted that they were getting a lot of Elliott Wave options people. And so they created some custom searches just for us. So if you're an Elliott Wave options alert subscriber and you have Profit Source, then you get all of these different searches that are programmed in here as a bonus. There's no additional fee for these. And these ones that say EWO here, those are mine. Those are the searches that I've programmed over time. And you can program your own searches into the software if you want. I had an email today from somebody who was asking a question about doing that. And so if you have your own favorite indicators that you like to look at, you'll see ours here when you look at the searches, but you can program your own, create your own search. And then there's some other cool things that they just thought we'd be interested in. The ADX moving up, that's a big part of the DMI, which you look at a lot. Stocks in a bullish wave 3 or a bearish wave 3. And I've been a big fan, a big proponent of trading wave 3s. A lot of people say stay away from it. It's the strongest wave. I think that's a mistake. But when you see a wave 3 and you go through and you look and you see the zigzag pattern within the wave 3, then that's a great opportunity to trade it, in my opinion. And it works out really well. So let's take a look. And then we have this momentum scan, and we've had some success with those. Let's take a look and see what we have. Prophase Labs. No idea who that is, but just out of curiosity, let's take a look at it, see what the chart looks like, and didn't like me doing that. So bear with me for a moment. I'll bring it back up. Maybe that's an omen, right? Maybe that is kind of a, maybe we shouldn't trade that one. If you believe in that kind of stuff, perhaps this one we should stay away from and say, yeah, no, I think we won't do that one. But let's take a look at it and see if it'll come up this time. If it does that again, then you know it's like that potential stock is cursed, and we don't want to trade through that one. Here we go. So we're up to resistance, so that's an issue anyway. We certainly wouldn't want to do that tonight. Now we do have an ascending triangle. You can see the higher lows, and we look at the Elliott Wave pattern. There's your wave 3. And the target price is at 9s, trading currently at 767. Be a decent move out of an $8 stock, but for me, I would want to see it break that resistance level first. Well, let's look at the DMI. Yeah, so no way. The ADX is way above the positive directional indicator. That's not the signal that you would want. Now, maybe it does break out of this triangle, break to the upside, and hit that wave 5 target. It may very well do that. But for me, this is one I would walk away from. And I'd probably put it on a watch list and just keep an eye on it. There's too much separation there between the ADX and the positive directional indicator. That's an indication. It doesn't mean the move is over, but it's an indication the strongest part of the move is over. And so if the strongest part of the move is over, is there enough left to break that resistance? Maybe it doesn't go and hits that target, but I want to put as many percentages in my favor as I can, knowing that nothing's 100%. We're not always going to be right. We're going to be wrong sometimes. We're going to have losing trades. That's how trading works. So why enter one where you've got a red flag when it's difficult enough when everything is lined up? So let's stay away from that. And maybe the software was saying, don't waste your time. And so that's one of those omen things. We can keep an eye on it, see what happens, but I'm not interested. So then we go look at the bullish impulse stocks. There's 3 of them. Look at that. Mr. Goog is back. My favorite stock to trade from Elliott Wave. It's been by far the stock that's shown up the most and by far the greatest success that I've had since I started trading Elliott Wave in 2001 is when I started trading Elliott Wave. So I haven't traded it the entire 25 years of my trading, but for 20 of the 25 years, I've used Elliott Wave, and Google just shows up. It just shows up a lot, and it's accurate a lot. So that's exciting already to see that. Now, another thing that I like to do, just to see if there's one in a wave 3, is you can come over here and click on bullish wave 3. So now we have both of those boxes checked. So are any of those 3 showing consideration out of the confirming indicators? And is it in a wave 3 as well? Well, you can see one of the 3 is CDW. So we certainly want to take a look at that, but I can't wait to look at Google again and see what's going on. We had a couple successful trades recently. We did a out of the money butterfly with Google, and we did a call debit spread going into earnings with Google. So and yeah, I will trade through earnings if the pattern is good enough. That question comes up all the time. So CDW, boy, that looks pretty good. Right above, I think this was on our search before, wasn't it? And it said I wanted to see if it would break this level. Was it last week that this one was on there too? I know I've looked at it in recent times, and it has broken above that area. And so now here we are back on the search, and let's go back to just isolate the DMI on here, and you can see, man, now that's so much better, isn't it, than what we saw on this Pro Phase Labs as far as the DMI. Completely different scenario here. 10-day moving average, we're not that. I mean, we got a little bit overbought on the breakout day, but then we've consolidated, and there we are with a wave 5 right at 200. And you know how I feel about those big round numbers. That one's going to be pretty tough to avoid. So we start to make a note of what we're going to look at today. But before we do, let's take a look at the options. And so we'll pull up the options chain, see what it looks like on CDW, and make sure that we're not jumping the gun here on something that really doesn't have a lot of options. Well, December and bringing the magnifying on here so we can see them a little bit easier. And super wide spreads. And now the 29 delta is tight. See what they're doing? This is when you start to go further out of the money and they widen the spreads. Aggravating, isn't it? You know, you come up with something, you got to be on your toes. That's a really important. We do these pro trader tips too, if you've looked at them on the internet, and you got to be on your toes. The market changes, things change. What works for a while may not work forever. And if you're not willing to adapt and change with the markets, you're not going to be successful over the long term. You might have a successful run, but then if you're just staying static with your system and you're not willing to adapt to changes in the marketplace, well, then that system isn't going to work the way it did before. That's the adjustments that we've talked about with opportunities sometimes where we have to move away from the out of the money acceleration, et cetera, just because if they're going to zap you with the implied volatility, it nullifies the acceleration. But that looks pretty good. December is a little bit far out, but I really like the looks of that one as far as the 200 strike. So now we'll go back and we won't do it yet. We won't make the call yet. So let's uncheck the bullish wave 3 there and just leave it on bullish impulse stocks and go back and look at these 3 because you know I want to look at Google. And so here we are. this is the GOOG symbol without the L on the end of it, which is the A shares. And then not a lot of volume, but it's a doji today as well. So let's see what the Elliott Wave chart says, and we'll take these off here. Then a wave 3, pretty good looking DMI. I would have liked to seen if we were going to have a little pause here, the ADX maybe come back to 20 and reset, but it's hung in there. Little bit of a tick down on the positive directional indicator with the doji today. If you wanted to be safe here, you could let it break that wave 3 high. Let's see where the target may be, all the way up there at 33.20, and we're trading at 20. That's a big move. Yeah, I think that we could be a bit more cautious on this. I mean, the DMI looks supportive. The CCI, that looks good too. Money flow is positive. No divergence there. That's what you want with a CMF, is you want to see if there's a divergence. So I'm going to leave this to you. A conservative way to trade this would be let it break this wave 3 high and create a new wave 3. There's plenty of room before it hits the wave 5 target. That's the more conservative way. The aggressive way would be to go ahead and go long now. You can see we ticked down and kind of came close to filling that gap. I don't think it exactly filled it, but that may be as close as it gets. Usually they actually fully get filled, but sometimes people step in just before. And so we're moving up. We've got a doji here, so we've got some indecision right underneath there. So as I said, it would be an aggressive trade to put it on now, just a bit more conservative. Let it break above 2,800. It's not that far away, and then move in. So what I'm going to do is I'm not going to label that one as an official one yet, but I'm going to put it on the watch list and say if it breaks that, then we would look at that. So on a break, and I am old school. You can see that I'm writing here. I know people have fancy spreadsheets and more computer literate than I am, etc. I just still write stuff down. And I find that it helps me remember more too by writing it down. Just an old thing from school, right? You're always taught your memory is better if you write things down. So I just have stacks of tablets. If you saw over the corner of the office here, there's a whole stack of old yellow tablets of stuff that I just make notes from watch lists on things to look for, etc. So break above 2,800. So we'll stay on the conservative side with that one. And then one more, and we'll open it up to some questions with the few minutes that we have left. We'll look at ADP. Oh, I had a nice move today. Dang, that looks pretty good too. So we might have to do both of these. Look at the setup here. So let's get the CCI off. Break above average volume. So confirmation, we had this sideways here. That's kind of the launch pad effect. People that have been with us for a while know that I talk about. Usually it's a little longer than this, but that's exactly what it looks like, where you just go dead sideways, live on the Space Coast. So it's kind of like a blast off effect. So we'll call it the launch pad. So that's what happens. You get this super sideways consolidation and boom, and you want to see confirmation. The DMI looks good. Volume is good. That really looks like it wants to go higher. Now we're at 130% extension already. So you really want that DMI to be confirming it to see if we go to 161.8, and it is. So that looks good. And so I'm pretty sure the options are good here as well. We've traded this before, but let's go ahead and take a look anyway at the options for ADP. So we'll probably have those two as our considerations for this week, and put Google over there on the wall. Oh yeah, tons of options and really good liquidity. Spreads are tight. I don't even need to put the magnifying glass on there for you. They're good. That looks really good, actually. So, well, there we go. So for this week, we're going to have CDW and ADP. We kind of varied from our norm where we were just looking at one case study consideration for the week. And then we went through and we were looking at a few, and we've had tons of them that we've closed out that have hit profit targets. I think we've only had two that are, to my recollection. There might have been a third one since the very beginning of TradeFinder. that would have been closed at a loss. So the record has been really, really good with our case study considerations. Now you're at this point on your own as far as how you manage it from here. So then we identify it as a case study consideration, and that's it. It's for you to consider, what you would do with it. Sometimes, as I mentioned earlier, they end up going out as alerts to our alert subscribers. Sometimes they don't. Tomorrow's a different day. We're looking at what happened at the end of the day today, and certain things may occur that make us stay away from sending them out as alerts. And that's what happened with last week. So those look pretty good. All right, so go ahead and look at some questions. And, you guys, I see out of the corner of my eye, you figure this out where you start typing in what stocks you want to see right at the very beginning of it, so you get in. But I'll try to make sure I get some of you that are more recent down at the bottom as well. So Digital Turbine is symbol APPS. Not really sure how they got that. I'm sure somebody has more knowledge than me on that. Well, this one's at massive support, right? So we had this, let's take a look. Is that support? Oh, the wave 5 extended 207%. When you see that, that means that the correction following the end of the wave 5 does not go back to the previous 4, not necessarily. It means that you look for a 61.8% correction. And boom, spot on, right on there. Thanks, Bob. You set me up perfect for this Elliott Wave Fibonacci stuff. But there it is, right to the 61.8% level, and we've just consolidated sideways since. So that would be your stop loss. If it broke down below 55, well, then you may be coming down to the previous 4. There's nothing to stop it. There's no further support. That would be your exit. Just get out or trade it to the downside, because that's 30, not 30. Man, there's a big move to the downside there. So that would be a pretty good trade lower if it were to break that level. If you're waiting to enter this one, break back above the 38.2% retracement level. It tried it back here the end of June and couldn't hold it. So if it broke above that again and you had some support from the DMI, which there's nothing there now, if you look at that, really no signal from the CCI either. So just kind of in consolation mode here, or consolidation mode, you tried to say. So looking down here to the 61.8 again is your support. And if you break above 38.2, that would be an entry. If you're in it now, I would hold to see if you can hold the 61.8% level if it indeed comes down there again. MP. Oh gosh. You wonder what happens when it shows multiple exchanges. That means that a stock traded on an exchange and moves to another one. So there's data on both exchanges. And so if it's telling you that, then it means that you probably want to go find the other one for more recent data. So look at that, wave 4 right at 61.8%. That's as good as it gets from Elliott Wave. Now tried to break above this previous 3 and it couldn't hold it. So we tried on the 6th and it fell back. We closed right on it yesterday, but no follow through today. So we came back. Now the positives are you still have a set of higher lows. So you've created this ascending triangle. If you look at the DMI, well, it may just be waiting. It just wasn't ready yet, didn't have enough momentum. The ADX has broken above the negative directional indicator. There is separation between the two. Positive has come down a little bit because of the last 3 days, but you're at resistance, so that's not that meaningful. For me, if I was looking to enter, I'd want to see the ADX break 20 first. And if it breaks above 20, then hey, that's a pretty good signal that we're going to break out of that. And I don't think that wave 5 projection there holds. I think we probably go back to the recent 5 all the way up here. But I would need to see that ADX break above 20 first. As far as support, it's there at 35. You can see all the way back here, a major point of support resistance going back into the very beginning of the year. So 35 needs to hold, and I'd look for the ADX to break above there for it to move to the upside from there, but it looks pretty good. Brian, thanks on ZI last Thursday, sold near the peak and made a 679% profit. Good for you. Congratulations. Nice trade. Paul says, I watched the YouTube video of my 3 PJ Pros and he couldn't find them. And I didn't list them there. I have them written down. I'm not going to tell you because then you'd be picking one of the 3. That would have made it too easy. All I'm saying is that I'm not going to ask you just to pick my favorite. I've got the top 3 listed. And if your pick is any of those top 3, then you go into the drawing for the free subscription. So I was not clear on that when I stated it. I apologize. So yeah, no, I'm not listing the 3 for you to pick from. I have them written down. You make your pick. And if your pick is any one of those 3, doesn't have to be the favorite, but any one of those 3, that puts you in the drawing. So hopefully that helps to clarify. Thanks for asking. Scott wants to know, is it time to buy Bitcoin or should you wait? Well, it's doing exactly what I mentioned last night in the update, is the fact that it should consolidate. And that's exactly what's going on right now. It's consolidating. Some of the other cryptos are still moving to the upside, but there's too much separation right here. And so I would see what happens after it labels tonight, because remember, this is end of day data and it's constantly trading. So we know Bitcoin is trading right now, even though this is an end of day print. So a little bit of consolidation here, and then you get the run up to this level. So if you wanted to be aggressive and get in now, then understand that you may get a little more sideways, even potentially a little bit of a pullback, but it shouldn't be too significant. Your stop is right here at 40. So we've broken above that. That now becomes support. And so the run to 50 looks imminent, but may not be tomorrow. It may have to consolidate here for another day or two. So CMCSA. Comcast. Been around for a while. Well, that's probably diagonal as well. You see the wave 5 at 135%. Let's see what the DMI looks like. Yeah, that's just massive consolidation. The ADX is below 13. So if the options are good there, that'd be a great strangle. Examine the options and see. On Bitcoin, wait for the 61.8 to be, well, you've got a little bit of room now between now and then. That would be a more conservative play if you wanted to wait to see it break above that 61.8% level and then run the rest of the way. That would be more conservative. I don't know that you necessarily have to wait there, because I think the 61.8% level is going to happen. Home Depot was on there. It's in the alerts for the high value portfolio. So LOW. Lows is right here at 190. Massive support here, so that one's pretty easy. It tried to break below it, so here comes that importance of the second day confirmation follow-through day. Broke below it yesterday, no confirmation, back up to test it. Now try back here again and went back above the 190 level. Man, I wonder why it's wanting to break that level. We only had a 33% extension, so we've already satisfied the retracement back to the previous 4. It's done that. Looked like we were about to sprint higher there on the 23rd of July. No follow through there either. So right back here, we are below the 10-day moving average and the 50-day moving average, and the 10 that's crossed below the 30. None of that is bullish. You would want to see the stock bound back above 190, the 10-day moving average cross back above the 30, and have the stock trade above the 50. So for me personally, I wouldn't touch it until it got back above 195. At that point in time, those things should have satisfied themselves. The DMI is kind of setting up, it's not a signal yet, but it's setting up more for a potential downward move, but that is meaningless. So don't pay any attention to that when it hasn't set up. I don't look at the same way on a downward trend as I do the upward ones, as you know, with the DMI, the way it sets up. If it confirms it, that's different. But when it's setting up, stuff happens too fast to the downside. The DMI can be lagging. I would pay more attention to the CCI. Now it's down here at an extreme point to the low side, which matters for the CCI. So you take a look at that, and we could break to the upside from there. So that's the most positive thing I see is the CCI at an extreme point low that's held back in May and June. So it may hold again, but I still stand by. I would want to see it break above 195 before I would go long. If I was in it, I would hold. Now there's no reason to get out unless it breaks that 190 level. It's tedious. So take a look at it. So here's the yen, and obviously with the strength of the dollar, other currencies in the basket are going to be struggling a bit. And this standing with the yen, we had the wave 5 down here, so we're at support right in this area here. So lots of support at this point. If it breaks that, then yikes. May very well, it's going to at least test this wave 5 low, if not make a new one. So 85 is the key. Again, the DMI is setting up bearish, but it's not there. So don't pay attention to that yet. The CCI still has some downward room. So none of that is very bullish for the yen. But if you're bearish and it breaks below 85, then I think you got something working there. Gold. Yeah, we talked about that in the update. Gold had what some were calling a mini flash crash with this boom, boom to the downside. And why did that happen? I was really surprised after Friday. I thought that 165 might be a battleground because you can see that was support. But no, yesterday it just went down there. But you have the dollar strengthening, you have interest rates going up, and now you have this scuttlebutt again after Powell just squelched it all in his meeting last week, saying, no, we're not even thinking about raising rates. Well, now all the chatter is, well, all right, Jackson Hole, are they going to start talking about it? And that's a big financial summit that they have in Jackson Hole, Wyoming. Or are they going to stay with what Powell says? So now there's some speculation, concern that perhaps they will start at least tapering sooner than what Powell just said last week. So that's a frustrating thing about listening to the noise that comes out of the media, et cetera. So that would be a third thing. I put that one. I don't have a lot of faith in the Federal Reserve, so I shouldn't go that far. But Powell looked you right in the eye and said they're not thinking about it. So you kind of have to trust that. I think it's more to do with the strength of the dollar and interest rates ticking up. And so it looks like we want to come down and try this 160 level again, if not all the way down to those previous lows. It'll have a lot to do with what goes on with the dollar and interest rates. And now you have to take a look at this zigzag here, dead on a 50% correction, and look where that 100% extension lies, right there where the two previous lows were in March and April. Now, if we look at the 10-day moving average, you see gold is way oversold right now. So I don't think we're necessarily just going to run straight down there. We may fill one of these, or probably not going to fill that gap yet, but we might fill this one, or at least come back to the 10-day moving average. As far as being this far oversold, hard to imagine gold running down there yet, but it doesn't look like the downside is over yet for gold based on what happened. So it was just those two things occurred at the same time, and people, the gold bugs, just seemed to throw in the towel. Pretty interesting to see how that played out. All right, so that covers the symbols that you all asked for. Hopefully you found this informative. Again, if you haven't subscribed to the YouTube channel, go do it. Get involved in that giveaway. It's gonna be really cool. A little bit of a fun aspect there with picking the favorite PGA Tour player. Thanks for your attention as always. We very much appreciate your time. We know how valuable that is to each and every one of us. So thanks for tuning in. Look forward to talking to you again next week.